Hello traders, thank you for watching the RSI Reloaded part 1 to 5. This is the RSI Reloaded part 6. In this video we will discuss various aspects of the RSI indicator and how one can use the RSI more accurately. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW. Happy trading to you all. This is RSI Reloaded Part 6. If you have not watched RSI Reloaded Part 1 to 5, you may do so before watching this video. In this video, we will discuss how one can use the relative strength index indicator, like a professional trader paying attention to the price itself, the number one indicator. When the indicator gives signal or gives warning, we will wait for the price to give us a direct signal. As I explained to traders before, indicators will give indirect signal, but the price must confirm the indirect signal by giving to us a direct signal. On this chart, we are using the RSI period 1818 on the monthly chart. As you can see, the price was going down in this session, was a bearish season for the US dollar, Singapore dollar currency pair. This is an excellent currency pair trader can trade because it's a quite friendly currency pair compared to the USD yen currency pair. So here we can see if I extend the region for my indicator here, you can pay attention to the indicator here. We can see that the price display a low, the RSI display a low and display equal low. It's not a lower low. Pay attention carefully. Pay attention to the horizontal line. There you see it's an equal low. Pay attention to the horizontal line. There was this low here, followed by this low here. There was an equal low for the RSI. But you can see that the price at that point was displaying a lower low right here. This is a bullish divergence. A bullish divergence, ladies and gentlemen, is just a warning. Traders get into trouble sometimes because they are trading the indicator instead of trading the price. When we see a bullish divergence, we just say, aha, it's a warning. So you are driving, you see the sign that the road is going to become small, you know that what to do, The same thing, the bearish momentum was progressing nicely. Here the indicator is telling that this is not, in fact, a lower low, but it's equal low because all this RSI is doing is moving the progression of the price here. It's giving us a different image of the price. Right here. It's a smooth progression of the price that the RSI is giving us here. It's saying to us that there is too much volatility or distortion in this price progression here. In fact, what you are looking at, though you see a lower low here, is equal low. It's a warning. Sometimes the problem we have is that traders are trusting more the indicator instead of trusting the price itself. So we will say to the RSI, thank you very much for the information given to us. We will wait for the price itself to give us a direct signal. How do we do that? So this is about practical trading using the RSI indicator. How we can use this tool. Like professional traders, because traders are using this tool every day, but they are making wrong decision after wrong decision. Equal low, price display lower low. So the price was in a bearish channel, as I explained to traders. Three things that the price is doing: rising channel, declining channel, horizontal channel. The price is in a bearish channel, the blue channel here. RSI give us a warning that this bearish momentum, there's a high channel, this bearish momentum may stall at this point in time. I draw another line here. You see the black line here. This is what I call common sense trend line. A trend line that we draw very close to the price itself. You see this one here. If you follow my cursor here. At that point in time, we see that on a monthly chart. What do? Nothing should stop us to be a bit... let's go to the 2 days chart. We can go to the daily chart. For this exercise, I decided to go to the 2 days chart. Okay, you see my channel, the blue channel is still visible on this 2 days chart. You see here the blue channel and my black common sense trend line. So I can switch to this time frame, and now, okay, at least before I will take a bullish signal, at least the price should break the common sense bearish trend line. I'm not going to buy here. I will prefer it break above it and give me higher low, break above it and retest it. In this case, as you can see on this 2 days chart, because we have seen something on the monthly chart, now we switch to another lower time frame to verify what is taking place, or to zoom into the price, so to speak. All right. So we see here that the price was giving us a higher low here. It's a tricky one because the higher low is still in a bigger bearish, okay, channel, the blue channel here. It's a tricky one. That's where a lot of day traders get into trouble, because the higher time frame commands the lower time frame. This bigger channel, we have drawn it from the monthly chart, is still in place. Myself, as a conservative trader, I know that the smart money also will be very patient. Smart money will not rush. The smart money also will prefer the price to break above the bigger channel and to retest it. But this is not a good one. Why is not a good one? If we go back again to the monthly chart, all right, because the indicator has given us a special information. We do not rely on it, but we just keep our eyes wide open and see what's going to happen. You see this tall candle on a monthly chart is traders that enter the trade at early stage, either on a daily chart, on a 4-hour chart, on another lower time frame. They are the one that propel the price to this level on a monthly chart. But the smart money is not rushing. You see the channel is still in place here. You can see that the price pop up to the channel with this stock and the retest here. It's not a good one. It's not a good one because we have one low here. It's hanging up here. Very often, the market will prefer either a double bottom or a double bottom that's with a higher low, a bit closer to the previous low. Something here is a good place for traders to try to enter the trade. You see this candle here, the green one here. It's a better place because it was trying desperately to retest it properly, because we will prefer the price. This is not, if you see like this, it break above it and just hanging around, it's not good. We want it to break above and run away, to deviate away from the channel before coming back to retest it. That's a beautiful one. But you can see that traders were rushing into the trend. It usually takes place. You see, people are saying it's going to change now. People are coming out of the bearish trade. They don't want their profit being erased, okay, by the newcomers. So they are rushing into the trade. Other traders are coming to it. It's blah, blah, blah going on here. So sometimes you need, a lot of traders knew that the price is about to go up and they are desperate to get in. And you see, you just need to be very patient. This can go on. The price now at 12237, 12237. The lower low is this level 112,000, the 12,000 level. Okay. Okay, the 12,000. Remember the Euro USD, what we were saying, the 12,000 level. That was the low for this currency pair, the USD, okay, Singapore dollar currency pair, okay, the dollar Singapore currency pair. The lowest point was 12,000, and the price, you see, break above the blue, okay, the bearish channel on the monthly chart. It may be dragging like this all the way to retest again the 12,000 zone, but what I can say to traders, there's a one level here that I want you to pay attention to. The level of 12200. 12200. As long as we remain above 12200, we can take higher low signal above that level. Okay, which means bullish signals. Price display higher lows, higher high. It's bullish. In a bullish channel, we can take those trades, okay, above the level of 12200. This is not a signal to buy or to sell. It's an educational video to explain to traders how one can use the RSI indicator. So, in fact, though we knew that the RSI is giving us a warning here, there is a lot of blah, blah, blah taking place here, you see. All right. So, for traders to manage this, you have to use your trading tools, which means the price is not going straight line. You see, it went down, went up, went down, went up. So you need to know how to follow the price instead of, if you are just an old-fashioned trader, you enter here, you'll be, if you don't have enough money, you'll be taken probably out already. Okay, so you want to be taking profit gradually, okay, at different level. Okay, as the price move up, to a resistance level, take profit, okay? But you can see now that the market is trying to do something because we are still hanging around this, above this level. We break above it, you see? It's a bit messy here. So on the monthly chart, we can't enter here. This is the setup. You remember? The setup, the signal, and the entry point. All right? If the signal has failed, we come out and wait for the next signal. All right? The setup. This is the setup. So the indicator gives us a bullish divergence. The price now out of the channel. But you see now there's another channel here. Pay attention carefully. It's about practical trading. This is what we are doing all the time, guiding traders so that they may avoid repeating the same mistake over and over and over and over and blame their trading tool for nothing. So here we see, we came out of the blue channel. You see here on the monthly chart. We are now in another channel, you see. In fact, what I will do now, I will color the new channel into red so we can differentiate both channels. Okay, moment please. 1 second. All right, I delete. You see now? So we came out of the blue channel. Now we are again in another channel, you see. Though the price out of the bigger blue channel, we are now in another red bearish channel, you see. The price is not displaying on the monthly chart, okay? Higher lows and higher high. We have the first higher low here, but that higher low was not followed by a higher high. The previous high was still intact. You see here? Okay, the language of the price, higher lows, higher high. We did have, okay, higher low here, okay, right here. But that higher low was not the bullish momentum that has started from here, did not, okay, break the nut, so to speak. All right, this is the nut. You remember the double bottom, the nut, the double top, the nut. You see this level, this level. If the bullish momentum was strong enough, if the conviction was strong enough, if the enthusiasm was strong enough, we should be able to break this nut here. All right. But the level I want you to pay attention to is 12200. If you receive a bullish signal for day trading purposes only, all right, in a bullish channel on another time frame using your trading tool, you may take it. But know that you are still in another bearish red channel. So traders will be looking for buy signal near the 12200. If it's running near the edge of this red one here, you need to be careful and pay attention to all the resistance level here. Look, we are still in another channel here. It may be, you see, it may be, if you break above 12200, priority to bearish signal. If you stay above 12200, priority to bullish signal. But the 12200 is a psychological price level for the US Singapore dollar currency pair. The trading activity in this zone is very, very tough. You may decide to stay out, or if you want to play carefully. The price may roll it back down to the 12,000 level. If you stay above the 12200, watch out for the top of this channel. You see, though we see the RSI has given us excellent information here that the bullish momentum is weakening by giving us, by giving us 1 second, please. By giving us a bullish divergence, okay, a bullish divergence here. But you can see we want to keep our eyes on the price there. You see, paying attention to the channel, the three channel. See the common central line. All right, first the common central line and the channel. We came after the channel. We went into another red channel here. You see, but if you are just trading indicator, all right, traders are placed trade here, but you have to know that this is the setup. You want to know the signal, and then you want to know the entry, okay, point. This is how the professionals are trading carefully without, okay, getting into trouble. And you want to do exactly the same thing. Going back again to the 2 days chart. I don't want to go to the daily chart because too much distortion on the daily chart. I'm going to the 2 days chart. The bigger blue channel was here during that time. We can be very patient. This is a one trader will give a chance to, because we see it. The common sense black trend line was kaput. We see a bullish divergence on the monthly chart. The common sense trend line on the 2 days chart is kaput. Price give us a higher low here. The first higher low. Yeah. You can use your trading tool, trading system, whatever you are using at this point in time to look for a clear-cut signal and select a low-risk entry point. Okay, which means you want to buy at a valid support level. You want to sell at a valid resistance level. But wait for signal. Price going up, price looking for a better resistance level. Pay attention to resistance levels as the price going up. The first target zone is the first and nearest resistance level. All right. So here, this is what we are doing all the time. As a TST trader, we do not trade for traders. We put attention to traders. We empower traders. We give them the information. That's what we are doing again here. So they may see clearly what they need to do, and they go and do it themselves. Okay. So now you see here. So this is a good point to enter. Price going up. You want it if you have a higher low. If the bullish momentum is truly strong, the price should break the previous high. It didn't. You see, this is the previous high here. After a higher low, it couldn't take it. In fact, you see here, couldn't break the previous high, which put a question mark on this bullish momentum that has started here. As a swing trader, you should understand the language of the price straight away. I know that something is not right here and grab some profit before it's too late. You roll it back down to the same level, display double bottom pattern. All right, you may give it a chance again. You see, it went up not much. Okay, blah, blah, blah. Third time here, as I say to you, third time is mine. One time, second time, third time. This time, trader took it again up, you see. Now, it hit again. In fact, you see, so though we are talking about how to trade the RSI, our attention is more on the price because we know that the RSI is just duplicating or smoothing the price itself, the progression of the price. So we should always keep eyes on the price. If the RSI gives us a signal, either bullish or bearish, the price must confirm, okay, the signals. You will also notice that I use the RSI for 18, and most of the traders use 14. Why they use 14? Okay. All right. It doesn't matter. Okay. It doesn't matter which setting you are using, but you may try different setting or different time frame and see which one is suitable for you because you are trying to smooth the price. That's what you are trying to do. You are trying to. The momentum indicator are measuring the speed of the progression of the price. At the same time, they are smoothing the price itself. If the price does not move, the momentum will not move. Okay. Sometimes there are distortion. The price can be distorted or the indicator can be distorted due to, okay, major economy news or other issue in the market or market manipulation also. All right, the price can be distorted. Okay, so you want to know where the price distorted or where the indicator has been distorted, so you do not misinterpret the indicator. Okay, do not rely on the indicator. What I'm saying to you, though you are RSI trader, you want to keep your eyes on the RSI itself, or you want to keep your eyes on the price itself. That's what I want to say. Okay, all right. So you see the blah blah blah. Okay, how we take it from the bullish divergence, we break it down, the channels, that's what we are using all the time, channels. Now we are again stuck in this channel here, okay, but there's one level, 12200 here. That's what we see on the, okay, today's chart. To be a bit curious, this is what I say to traders, be curious, okay. If you have been cutting this corner, okay, I encourage you. Okay, nothing wrong. A lot of new traders cut corners. I've done it myself. But know that, okay, slowly but gradually, you want to perfect it, okay? You want to do it properly, okay? So I encourage you, okay, to start, okay, just be curious. Nothing stop you. Just click on it. Even if you look at it, just get into this habit of clicking on the bigger time frame to see, okay, what is taking place. Well, you want to see it. What the professional looking at, what the hedge fund looking at, they are looking at the yearly chart. Do the same, okay? Do the same, okay? Don't be behind, okay? Catch up, okay? So you can see I talked about this last time in one of our videos already, so I don't want, this is a bullish candle, but look, the bullish candle was not followed by another bullish candle to confirm the reversal, but in fact we have another bearish candle going down now. The low of this candle, the low of this bullish candle, the green one here, is at 11991, which is around the 12,000 zone. See, this is a support level. The low is a support level. There were buyers here. That's why this got a tail. So now the bear are taking control of the bullish zone because this zone here was a bullish zone Language of the candlestick, Steve Nielsen. Okay, all right. So we are curious now. We see what is taking place. That the bear are dragging their feet to push it back down. But if we go back again to the monthly chart, so we have been curious. Look, you see, it's so simple. What the price is trying to do, the price to give us a double bottom pattern, which is a validation of a support level. Without validation, ladies and gentlemen, validation and retest. That's what the market is doing all the time. Important money has been spent in the market, and the smart money is not prepared to gamble anyhow. They want validation, they want retest. This was the last low. This was the low before the last low. The bullish momentum will be strong after we break above this level, the previous, okay, low, this one here, the green line here, okay, in a zone of, call it 12900, call it 12900, this green line here. When the price return above that level and start displaying, okay, or start progressing in a bullish channel, that will be great because we will be above the nuts. This is what I call the nuts. You see? So the low before the last low is a psychological price level, as I explained to traders last time. Now, the smart money, because this was the last low, they are trying again to retest that zone. It's a zone. It's not a price level. It's a zone. We are coming near. But look, we are in a bearish channel, but we are kind of near the edge of the bearish red channel here. But there's a one key level here, 12200. Let's go now to let's go to the 2-hour chart, okay? Let's go to the 2-hour chart and see what day traders that are okay trying to find out. Okay, you remember? Okay, you were stuck on the 2-hour chart, on the 4-hour chart doing your own thing. You don't know what was taking place. Now you see, now the 2-hour chart, what do they see? We know that there's a key level here. The key level is 12200. In fact, what I'll do, I'll move my line to that level here, and I will color it on the 2-hour chart for traders to see it, the 12200. Okay, I will color it now in red. This is the level here. On the 2-hour chart, now, ladies and gentlemen, let's play a bit with this, okay, on the 2-hour chart. What those who are trading in the RSI can see. Okay, on the 2-hour chart, look what's happening. There's this key level, 12200, the red line. The RSI has been overbought in this session here. Look, all right? This is what's happening for day traders, okay? Traders that go and trade anyhow, okay? We are not making fun of anyone, okay? But we need to talk about it, all right? So, you see there was a, let's highlight some key levels here. Oversold zone, that's where the trouble is all the time. Traders are buying every oversold and are selling every oversold on the 4-hour side, on the 4-hour chart, on the 2-hour chart, on the 30-minute chart, proprietary indicator, blah, 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 blah. Trade the price, please. Okay, so you see now, oversold here, look, oversold. Look what's happened. It went down, you see, on the 2-hour chart. It went down. In fact, the price was in the edge of this psychological price level, 12200, blah, 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 boom, down. You see, but oversold. Here, it was oversold again. The price, in fact, yes, it was coming near the level of 12,000 zone. You can see it was a bit. So you roll it down. There was a low, a lower low. Language of the price is bearish. Okay, if it's bearish, it must be in a bearish channel. So those who are drawing the line will always make excellent decisions. So, okay, you see now? So you will say to yourself, okay, this is what George has said. Okay, that's crazy, George. Okay. Okay. All right, so you say, okay, what George said is, okay, I'll draw my channel. For the first time, I don't like to draw my channel, but okay, just to do it. Okay, I have some problem here. My screen is frozen, so but pay attention. So we are in a bearish channel, okay? You see this one here. I can draw one here, but my screen is frozen now. I can't draw anything now. So you see. So if you want to buy, though the RSI was oversold here, you will prefer the price to come out of the channel first, the bearish channel. So you say to yourself, I will never ever buy within a bearish channel. I will prefer the price to come out of the bearish channel, to retest the bearish channel, or to give me at least a higher low before I can buy. All right? Or at least after I see an oversold condition, I want to see a bullish chart pattern that is out of, okay, so you see, the price break above the channel, we cover 1 second, please. As I'm fighting with, so to speak, all right, we have a kind of an inverted hand and shoulder pattern here, not a gorgeous one, see? A low, price went up, pull back a bit here, trader call it C, and there was a bit up here. This is about an inverted head and shoulder, the target zone, the projection, you see, and then you'll take this line and put it on top here. That's what trader did here, okay? All right? But look, after he break above it, he quickly return back below it. So you see a bull here. We have okay, here he was saying to us overbought. Okay, on the edge here, it's a tricky place because it's a psychological price level, tricky place. So you want to highlight a resistance level, which is right here, and give it a chance at a resistance level if you receive it. So if it's overbought, okay, highlight a resistance level and wait for a signal there. If you receive a signal, take it at a resistance level. Because you say it's overbought, if it truly is overbought, it shouldn't break above the previous high. It's just simple. It went down a bit, but went back up again, okay? Here you say overbought. Okay, it's not. You say oversold. Traders are looking to buy. There was a low, a lower low, a higher low. Now we have, it's a kind of, you may say, it's not easy because it went down a bit, okay? It's not easy, okay? Because you want to trade on the edge. Okay, we can draw another line like this. Too much drawing on my chart. This point and this point. This point and this point. All right. So it's again below a bearish trend line. You see here. But you want to pay attention to the support level. You see. So though the indicator is here giving us overbought, oversold, overbought, oversold. If you are just buying oversold, selling overbought, we can make a wrong decision. But we want to see the bigger picture and know what is taking place. Here, I will be happy to take this one because the reason is the signal here recently. In fact, I've been trading this currency pair, but I was concentrating only on a bullish signal. I did not take any bearish signal at all because I consider this currency pair as oversold. Okay, so you see here there was a low here, a higher low. Price pull back again, the same trend line. You want to take it on the edge because you see this psychological price, the 12200, that in fact we went above it a bit. It's a 12200. It's somewhere 12200. In fact, it's somewhere here. All right, this level here. That's where. Yes, that's somewhere in this zone. Okay, this zone. Okay, that's where we are. That's the 12200. Somewhere in this zone. Okay, the red line. Okay, so the pricing a low. A higher low, price went away, come back to retest the trend line near the psychological price level. If you receive a signal, the RSI also was oversold. You see? So if you receive a signal here to buy, we will take it. Okay? Just language of the price. We are still above a bullish trend line. If you were below, you see here like this, you want to be very careful because we are below it. See? This one. Oversold here, but we are below the bearish trend line. Don't take it. Say to yourself, I will never, I will ever buy any oversold below a bearish trend line or within, okay, a bearish channel. Do not do it, all right? Say to yourself also, I will only take, okay, an overbought signal, okay, at a resistance level or within a bearish channel, okay? If you are following this simple rule, you avoid making a lot of wrong decisions and you will trade the RSI like a professional trader, okay? See here? Overbought, but look, that time the price was coming. Look at this level, pay attention to this level. Was overbought, but the price was above the bearish, okay, trend line. This one, okay, you know, we can color it now. Okay, you can see the difference. Maybe it's too much for you because sometimes traders are angry that I'm using all kind of colors. Okay, now see, you see here, it was already above this bearish trend line. Okay. So this is not a good overbought, all right? It's not a good one, all right? This is coming near the overbought zone, but couldn't. But you can see that, okay, price touching this level. Here, you may give it a chance here because, okay, you see, on the edge. This one is not good because we went above it. Now what is taking place? That's the question. What is taking place, ladies and gentlemen? Let's remove all my drawing and let's play a bit as a crazy day trader. Who doesn't like to see the higher time frame? Okay, now we can see clearly what is taking place. I'm taking this low and I'm just drawing lines, okay, on my chart. Okay, this is what taking place. So what I'm going to do, I'm just going to pick one point on the top here and make it parallel to the one I've already drawn. We have a kind of rising channel on this 2 hours chart. And also, I know that there's a one key level here in the zone of 12200 for the US dollar, Singapore dollar currency pair. Lovely Singapore people. All right, so you see here. Okay, we know this level also, so we note it down. So now, you may say to me, George, what else can I do? Draw lines, just keep drawing lines, okay? Simple, just draw lines. Don't be afraid, okay? You see now, I'm not afraid of it. I tell you what, one thing I have never done before, I was lazy to do, is to draw lines. Now I enjoy doing it, so don't be angry with me because I'm drawing too much line, because it's so important to draw lines in this messy market, okay? You see here? Touch it here, touch it here, touch it here, touch it here. Draw lines, draw lines. Okay, you see here. Now we know we are in this channel now, the blue one. We are also above this one here. The market, okay, we know there's a psychological price level here, 12200, which is gorgeous. All right, okay. The market may decide to pull it a bit down. We will see whether they will do that or not. They may decide to, because this greedy trader may prefer to take profit here instead of stopping here and bring it back down. They may prefer to bring it on the edge here and take profit before bringing it back, okay, slowly, gradually. This is about a technical analysis. We have talked about the RSI indicator, how one can use it, and how to avoid, okay, trading mistakes. Now, the next step, the market is not all about technical, it's also fundamental. We are talking about the US dollar, comparing the US dollar to the Singapore dollar. We are comparing the US economy, to Singapore economy. That's what we are doing here. You may say to me, George, I trade only stock. It's same thing. So don't go away, all right? Stay with us, all right? Thank you for watching. So we are comparing. So recently we know that there is an election in the United States that was completed. Okay, you can understand why traders were careful here. They were not pushing the price. You can see beginning of 2012, the first thing that is coming to the mind of all traders, currency traders, stock traders, commodity traders, is the US election. Today, that election is won by the Democrats, okay? All right? So, we know now that, that's uncertainty is removed. Today is the 8th of November 2012, time in London, 1 minute past 8 p.m. in New York, 1 minute past 3 p.m. Okay? So, we can see clearly now that during the period of the campaign, traders were careful. Though the market will know that, there was a bullish divergence here, you see that they were careful. People, the bear, took their profit fast in this candle here, the green one here, and there was no commitment as such, no long-term commitment. It was just scalping, taking profit gradually. But now the election is gone. We know that the U.S. economy is recovering, is no more in recession, the proper sense of the word recession. This is about the fundamental trading triangle, market first, sector, individual financial instrument, the heart of the trading triangle, the leaders, the news, and the fundamental. This is about trading plan. You see now? So we have done the technical. Now how about the fundamental? The U.S. economy is recovering. Yes, China is the dominant force comparing China to Singapore. We are expecting, as the Eurozone is experiencing a kind of contraction, there will be a kind of contraction also in Asia. Talking about that, there will be, outflow of finance out of the Asia zone back to United States, because during the recession time in United States, there was outflow of finance out of United States into all these emerging, like Brazil, Asia countries, Now the U.S. economy is recovering, which means a lot of financial instruments are, bargain, so to speak, at this point in time. The U.S. economy is recovering. You will see again outflow from one zone of the world into the U.S. Economy. As this is taking place, you will see a kind of contraction in those zones. It does not mean that everything will be upside down, but you will see a kind of contraction. In my view, I will be giving priority to buy signal regarding the USD Singapore dollar. But there is something else. They are talking recently about, okay, all right, the tax, okay, situation in the United States, you see, the fiscal cliffs, okay. There is some discussion going on, some compromise that should be, okay, settled regarding the Democrat and the Republican in the United States. Talking about, okay, politics, how the politics can mess up all the blah, 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 which means if there is too much doubt and uncertainty regarding how the Republican and the Democrat will sort out, okay, their, okay, debts, okay, trillions of debts, okay, you may see the dollar going down, which means dollar going down. You will see this currency pair breaking below the 12200, even below the 12,000 zone. That question mark is now taking place in the United States, where a lot of investors are watching carefully, okay, the resolution of what we call, okay, the fiscal cliffs that everybody is watching carefully. If the uncertainty continue, the price will break below the 12200 and seek the next level, that is the 12000, the 12,000 level. As you can see, it's not all technical. It's both technical and fundamental. This is about trading like a pro and how to trade, okay, the RSI indicator. Okay, I've said enough. I hope you have enjoyed this video that you will put into use, okay, to make excellent trading decision. Thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders.